Hello traders, in this series of videos we're going to look at how to decode price action. We're going to look at a 5-part series of videos looking at the candles, looking at the wicks, really explaining how I see price action and how we teach it here at Day Trade to Win. Now before we begin, remember that trading is risky. Please don't trade with funds you cannot afford to lose. There are risks involved with trading. So if you look at the chart here, most traders will understand that the market goes down and then goes up and then goes down and goes sideways. So what we're going to do here in this first video is give a little bit of insight to try to understand what we're seeing, how we can decode it, and really how we can take advantage of the market either moving up or down for some opportunities. Now what most traders I think fail to look at is how at a specific price the market reacts. Now there is long-term support, short-term support, and resistance, but we're not going to focus so much on a previous set of price points, support and resistance, although I think those are important. What we're going to look at is how the candles and how the market is reacting in the now, which is really important. Now if you don't already have a member account, we are offering free member accounts. You can download a few set of indicators and learn a few methods, as well as the news indicator for Ninja Trader, and you can also learn the ABC indicator or ABC method, and you can download it when you have a free member account. So visit daytradetowin.com if you are interested in a free member account to learn these other methods. Now looking at the chart, what I'm seeing is at a very specific price something is happening. And so take for example on the far right hand of the chart, the market comes to this price and stops. Now by itself we see a wick, we see a candle, and it's meaningless. So at this point the market could continue to go down or it could reverse and go up. But the very next candle also has a wick, and it's showing that the price 41.54 is somewhat significant for whatever the reason that may be. Now again, 2 candles, maybe enough information to tell me should I buy, should I sell, should I get out of a trade. But as we continue further, you're going to see that there are multiple candles here at the very same or relatively same price that are encountering support. So the rule of thumb that I teach is when you look at a set or a group of candles, that this is resembling that multiple times the market is trying at some price point and failing. Now this doesn't have to be on an hourly chart, which this happens to be a 60-minute chart. This can also happen on a 5-minute chart or a 1-minute chart for day traders. So this is what I'm showing you more for a swing trading, whether it be a stock, a NASDAQ, an E-mini, it doesn't really matter, equities, even Forex and currencies. But what you're seeing here as price action, when you crunch up the chart a little bit, it becomes a little bit clearer that the market at this price, not once, not twice, 3 times, 4 times, 5 times, that it's stopping. The rule of thumb and what we teach in the Accelerated Mentorship class is 4 candles. 4 candles is enough to tell me that something is happening. There's support here. Now it could be because of prior resistance or prior support. In this case I'm not really looking at that. I'm only looking at these 4 candles. Now as we continue further, this happens again at the same place at around 41.46. the market comes down, stops a second time, a third time, a fourth time, a fifth time, a sixth time, all at the same area. Now what I look at this, it's not just one candle. It has to be a minimum of 4 that is showing me that. Now the telltale sign, here's the secret sauce here in this idea of when I should be looking at this, it's the wicks. When you have a grouping of candles with just wicks trying to continue lower or higher and failing, you're going to have that as the proof that there's something occurring, whether it be support or resistance. Now up here there's only 3 candles, so it's really not enough. Even though you have a wick, it should be a minimum of 4. And as I continue on here, you can see that it's trying again, 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 and again. So there are a grouping of wicks at the relatively same price that are unable to continue lower, and then the market will change. Now this is an hourly chart. Here it is again, trying, and failing to go lower at this price until it finally does. So as an example, if you're a trader and you're thinking about taking a position to the long side or getting out of a short position, or even trying to wait until this breaks to the short side or long side to get into a trade as a new trade, this is a perfect example where you have it stopping, you wait until it moves beyond this area, and now you can make a decision to be a buyer or a seller. Now this is an hourly chart. Let me switch over to a 5-minute chart, and it's the same exact thing. It doesn't even matter the market. So I'll change this to a NASDAQ. We'll go to a mini NASDAQ MNQ, and on an MNQ here, starting right over here, we have the market pausing. It pauses again with a wick. So it's really important that you see the wick trying and coming back up, trying and coming back up. So here we have about 3, 4 candles, 5, 6, 7. At this point, I already know what I'm looking at. It's not a great idea to try to go short until it breaks this area. And it finally does. Starts to go lower. So the wicks tell me that there's a support or there's a cautionary tail that's happening. Now to the long side, so I've shown you some examples of the short side. Let's take a look at some long examples. So crunch up the chart. Take a look at a grouping of candles, at least 4 bars. We have them here, trying to go higher, trying to go higher. So you have them at the very same price, and it's failing. This is resistance. The market is having a hard time, at least for the moment, in order to go long to the upside. And I could say the same thing here, but although here we may have 4 or more candles, they're not really pronounced with wicks. Unlike here to the short side, this to me is great. I see here multiple candles with the wicks trying to go lower but failing. So as the first part of understanding candles and wicks, support and resistance, crunch up your chart. It doesn't matter the market that you're looking at. Here's another example right over here where we can see very clearly, just using price action without indicators, what is happening as the market is trying to go lower but unable to, for whatever the reason, for the moment, and then it reverses. Now it doesn't really matter if it reverses or if it continues to the short side. It's just for the moment. I need to understand what price action is telling me until I understand the next step. Should I buy? Should I sell? Is it breaking out to the long side? Is it now breaking these wicks and going lower? That's where I enter into the trade. If you have any questions, if you'd like to learn more on how we trade and teach price action, visit Daytradetowin.com. Join the next Accelerated Mentorship class, and I'll see everyone at the next video number 2, where we continue looking at price action techniques and decoding price action. If you're new to day trading and want to learn more on the benefits of trading the markets, visit Daytradetowin.com. Join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and we work exclusively with new and beginner traders who want to learn more on how to prosper from trading.